One of them. It announced a big acquisition. Vamakshi is here to give us the details, the amount they are putting in, how they are funding it, and a lot more. Vamakshi.
Absolutely, Sonal. You know, Tega Industries just announced its boldest move yet. Now, teaming up with Apollo Funds, Tega will acquire 100% of Molycop for an enterprise value of 1.48 billion US dollars, and that's over 13,000 crore rupees. Now, Tega's own market cap as of close yesterday was 13,800 crore rupees. So, therefore, this buy is as big as Tega itself. But how will Tega fund this? Here is a breakdown. Tega will take 77% stake, Apollo 23% stake in the SPV. Tega will put in 361 million US dollars, which is roughly 3,180 crore rupees, funded by a mix of corporate debt worth 995 crores and a fresh equity raise worth 2,184 crore rupees. Now, in fact, Tega has scheduled a board meeting on September 13 to finalize the fundraising plans. Apollo will put in the balance 950 odd crore rupees, and there's a contingent payout of 120 million US dollars or 1,057 crores over 45 months if the performance targets are met. So why Molycop? Well, it makes the grinding media like steel balls, etc. used to extract minerals, especially gold and copper, while Tega, on the other hand, makes the liners and wear parts that protect those mills and optimize efficiency. So together, they can offer customers a complete mill solution, which translates into greater cross-selling opportunities. Now, beyond just the product matchups, there's strength in the footprint as well. Now, Tega has 10 manufacturing facilities and a strong presence in Europe, Middle East, LATAM, CIS and Africa, while Molycop on the flip side has 13 manufacturing facilities, 3 JVs as well, and plus a potential JV with footprint in US, Canada, Australia as well as LATAM. Now, combined, they will have 26 manufacturing sites worldwide. But that's not all. Let's also take a look at the numbers. Now, Molycop's revenues are about 8 times that of Tega's, but the margins, as you can see, are much lower. So, the combined revenues will stand at approximately 15,200 crores with the blended EBITDA margin of around 12.5%. But the good part is that Tega is buying Molycop at a much lower EV to EBITDA multiple, which is about 9 times versus its own multiple of around 41 times. Now, if this integration does work, this could be earnings accretive. In fact, the management said that it could be EPS accretive in the next 3 to 4 years. But make no mistake, there are big risks. Now, Tega is acquiring an entity which is much larger than itself, is spread across multiple continents. So, therefore, aligning operations won't be simple. Now, the other major concern is Molycop's debt, which is at $1 billion. But the management is optimistic about bringing it down to $800 million. The other concern is around growth. Now, Molycop's historical growth has been a modest 3 to 3.5%, and the management is expecting it to stay around in the same range, that is 3.5 to 4%, which is much slower as compared to Tega's own 15%. Now, additionally, Molycop's margins are lower versus Tega, but they're targeting an improvement to 13 to 14% range in 2 to 3 years, and in the next 3 to 4 years, they believe the combined entity could have blended margins of 18%. So, to sum it all up, this deal is big, there's no doubt. It's a big, bold step for Tega, and investors will be watching closely to see if Tega can actually pull this off, because this move could either be a game-changing leap forward or a very expensive learning curve.
Okay, Vamakshi, thank you so much for that. Surely keeping an eye out on Tega going forward as well. But today,